Hey, what's up everyone, and welcome back. So today we're diving into the topic that's crucial for anyone looking to take control of their finances, and some personal finance myths you may have heard. Whether you're saving for a home, trying to improve your credit score, or figuring out how to budget, there's a lot of misinformation out there that can lead you astray. But don't worry, we're here to set the record straight. In this video, we're debunking 3 biggest personal finance myths you need to stop believing. Make sure to stick around to the end because these myths could be costing you money. But first, don't forget to hit that like, subscribe, and notification bell. So let's jump in. Alright, the first myth is one that many aspiring homeowners have heard. You need a 20% down payment to buy a home. Now, while a 20% down payment can certainly help you avoid private mortgage insurance and reduce your monthly payments, it's by no means a requirement. There are many loan programs available today that allow for much lower down payments, sometimes as low as 3 or even 0% for qualified buyers. FHA, VA, and USDA loans are just a few examples of options that offer more flexibility when it comes to down payments. The key is to understand your options and choose a loan that fits your financial situation. So if you're holding back on buying a home because you think you need 20% down, think again. What's your experience with buying a home? Did you think a large down payment was necessary? Let us know in the comments. Next up, let's talk about credit scores. There's a myth that credit scores are too complicated to understand, but the reality is they're not as mysterious as they seem. A credit score is simply a numerical representation of your creditworthiness based on your credit history. It's calculated using factors like payment history, the amount of debt you have, and the length of your credit history, and more. By understanding these factors, you can take steps to improve your credit score. For example, making on-time payments and reducing your debt can significantly boost your score. Don't let the fear of the unknown keep you from taking control of your credit. There are plenty of resources available to understand credit scores and work on what you can do to improve yours. Do you have any tips on maintaining good credit? Share them in the comments below. Finally, let's tackle the myth that budgeting is too restrictive. Many people think that budgeting is something that limits their freedom and forces them to cut out the fun from their lives. But the truth is, budgeting is about making intentional choices with your money so that you can afford the things that matter the most to you. It's about not saying no to everything, but rather about prioritizing your spending to align with your financial goals. Whether you want to save for a vacation, pay off debt, or build an emergency fund, budgeting can help you get there. And the best part? You're in control. You decide what's important to you and where to allocate your money. So instead of thinking about budgeting as restrictive, think of it as empowering. It gives you the freedom to spend money on what you truly value. What's your experience with budgeting? Do you find it helpful or restrictive? Let's hear about it in the comments. And there you have it, the truth behind the 3 major personal finance myths. Remember, understanding these myths and how to overcome them can help make better financial decisions and achieve your goals faster. If you enjoyed this video, give it a thumbs up, subscribe, and share with anyone who might find it useful. And don't forget to join the conversation in the comments. What other personal finance myths have you heard? As always, thanks for watching, and I'll see you next time. This is Eli signing off.